Here's a fact. If you avoid every simple crypto mistake in this video, your profits will double in the next year. Sounds good? Let's get into it. Look at this trade. A massive 63% return. But if you look a little closer, we can see the trader used 50x leverage. If this person invests $1,000 into a trade, he's actually trading with $50,000 thanks to leverage. Sounds exciting if you know what you're doing. But this is mistake number one, using leverage as a beginner. Because while leverage can increase your gains 10 to 50x, leverage also means your losses are amplified by 10 to 50x. If you use leverage improperly, you're only one mistake away from losing your entire portfolio, like this guy. Now, luckily, this leverage mistake is totally avoidable, and so is this next mistake. See, to make great investments, you need great information. That's obvious. Picture this. You're on YouTube, you're on X, you search up crypto news. Boom, you instantly have hundreds of videos and tweets to choose from. That's great, but it doesn't take long to be overwhelmed by the information. There's simply too much to consume, and you'll just start noticing people contradict each other or just flat out lie. It's a lot. This is mistake number two. Overexposure to bad information. The majority of crypto information is just hype wrapped up nicely to look like research. Now, this isn't to say there aren't good sources out there. Bell Curve, Invest Answers, those are great for learning about crypto. There's many more, but you should double check every single thing you hear in crypto. Even from me, verify everything. But what if I told you bad information isn't the only problem? Good information is also a problem. There are so many opportunities in crypto. It feels endless. We're in this historic time where it's like, there are literally millionaires being made every single day. Just head over to CoinMarketCap. You can scroll forever. There's categories for AI, gaming, Solana tokens, memes, unlimited good options to choose from. But in 99% of cases, people invest in the wrong tokens for such a simple reason. Their expertise is spread too thin. They don't actually understand anything. This is mistake number three, knowing little about a lot rather than a lot about a little. When you focus on one crypto niche like AI or DeFi, you give yourself more focus. More focus gives you a deeper, drilled down insight into the projects within your core focus niche. You'll be able to spot details that other people miss, details about which projects tend to do well, what the tech can actually do here, or which projects are simply dead on arrival. When you go too broad, you simply miss that fine level of detail. And that's not even the worst beginner knowledge mistake. Did you know that you can easily copy expert crypto traders? Like right now, you can go and Google tools to copy crypto trades and you'll get tons of options. And it makes sense. Like, why study crypto trading or technology when you can just copy someone else who knows what they're doing? Like, that's a foolproof strategy, right? Not exactly. That's mistake number four, blindly copying trades. Give a man a fish, you feed him for a day, teach a man to fish, he knows how to fish forever and he gets fish. When you blindly copy trades, you don't learn anything. The trader isn't there teaching you. You don't have any real understanding of what you're doing with your money. Like, to get ideas from someone and then verify those ideas, that's one thing. Just don't blindly copy. I mean, just think about it. You're copying someone's trades, something goes wrong. What happens? You don't even know what to do. You're screwed. And crypto is so volatile that things always go wrong. It's literally guaranteed. Huge price swings are happening every day, every hour. And this is one reason why I make sure all of our trades and our research over at Finova are fully explained. Entry points, stop losses, market movements, everything is explained in detail. Our members don't just make money like this 5% gain, 30% profit, or this crazy 200% win. Our members build the understanding to keep making money without our help in the long term. And this is a good time to publicly announce some huge news for Finova. Finova has officially acquired InvestaShare Crypto Research. This means Finova members will have access to even more research, tools, and investment insights starting today. And that's not even the best part. You might have heard of Kyle before. He's this guy who traded $26 in Bitcoin to over 2 million in profits in around 500 trades. His win rate across those 500 trades is 87%. I've never seen a more consistent trader. And because of this, I'm excited to announce that Kyle is the new Finova head of research. I'm going to be stepping into a more traditional CEO role to help support him and our other researchers. So there's literally never been a better time to join Finova. I'll have that linked in the description below. Just make sure you grab your spot in time. Now, when you start making money in crypto, it feels amazing. Like, there's nothing better. Maybe you've made tens of thousands of dollars in one single investment. You have confidence in what you're doing. You're no longer intimidated by words like blockchain or DeFi or HODL or altcoin or bull market, bear market. Suddenly you see an opportunity that could make you massive wealth. Your next opportunity. This is where you're going to make millions. It meets your criteria. It's time to take your money and go all in on this thing. This is mistake number 5. Going too big too soon. Confidence is a superpower, but it's also an emotion. And in crypto, emotions aren't your friend, even the positive ones. Even if you have a few wins, nothing is ever guaranteed in crypto. Going too big on one sure thing investment has ruined more people than maybe anything else in crypto. So stay humble, stay small, stay consistent, and never get ahead of yourself. Never overexpose yourself to one asset. Never invest more than you can afford to lose. You really shouldn't be trading with more than like 1 to 3% of your entire portfolio on any given trade. This will keep you safe. But
of course, there's a dark side to playing it too safe as well.
the smart crypto investor will prioritize his financial safety over just about anything else. This keeps him in the game longer, keeps him investing, keeps him learning, and keeps him safe from making more mistakes. All this seems like the right thing to do, but that can contain a mistake in itself. That's mistake number 6, expecting a 100% win rate. Safety is important, but expecting a 100% win rate will stop you from making any money in the first place. What? You'll be too timid to take even the smallest risk, or you'll be emotionally wrecked the first time you have a failure. Nobody, no matter how good they are, ever has a long-term 100% win rate. Kyle is the best trader I've ever seen. He has an 87% win rate. So expect to lose occasionally, but focus on making those losses small and learning from each one. Now, speaking of small, there's another mistake that boils down to one word: time. You ever heard about someone talking about timing the market? You wait for price swings, dips, or wait to buy when everyone is selling like crazy. This is timing the market. Finding the perfect point to enter. And this is useful to a point, but for beginners, this is mistake number 7, focusing on timing the market rather than spending time in the market. Dollar cost averaging your way into Bitcoin is the easiest way to grow your money over time in crypto. It's difficult to predict price action, but buying that asset over time, like $100 a week or whatever your strategy is, that's the simplest way to do it. This takes your decisions and your emotions out of it. Data shows if you're not willing to spend time every week being an active trader and an active researcher, then dollar cost averaging and time in the market is absolutely the way to go. But this isn't the only thing that data has shown us. If you go to CoinMarketCap, you'll again see an absolute truckload of coins you can invest in. Endless opportunities. Start racking up investments across many coins and then just sell them before they start to dip. It's endless opportunity. Like, just start racking up investments across a whole bunch of coins, and then if they start to dip, just sell them and take your profits. Except, don't do this. Don't do this at all. Because this is mistake number 8. Buying and selling too much. The more you buy, the more fees you'll pay. The more you sell, the more taxes you'll pay. The more decisions you have to make, the worse your decisions will be. Yes, there's certain strategies you can use to lower taxes dramatically, like using a service like iTrustCapital, where you can invest crypto within a retirement account and avoid a bunch of taxes. But the point is, in investing, it pays to be the most patient, the most informed, and only strike when your criteria are met. Although, I will admit, sometimes holding isn't all it's cracked up to be. If you go on X, you'll see a bunch of people just going into frenzies over their newest, hottest crypto token. They all say something like this: "It's going to explode. It's changing the game. Fire emoji. Bullish." Basically, they're just hyped up and they feel like they're onto a winner, which that's fine, but they're all making the same mistake. Mistake number 9, getting emotionally attached to a project. Hype doesn't mean anything. Your feelings don't mean anything. Your FOMO doesn't mean anything. Most projects fail. You need to be cold, calculating, and logical. Never get emotionally attached to a project, or you're going to start getting attached to a potential bankruptcy. No! But the cold, calculating, logical guys are susceptible to beginner mistakes as well. Take a look at this price. And then this price, and this price. Do you know what all that means? Absolutely nothing. It's random. Don't look for patterns where there aren't any, and token price itself is almost meaningless. This is mistake number 10. Price does not equal value. A token price going up or down doesn't mean anything other than how much that token costs. If you want to know the value of a token, look at its market cap. Always compare the size of one token's market cap to another token. Market cap is also useful for eliminating unrealistic growth expectations. For example, if people are hyping up a meme coin to 100x, but the growth of 100x would give it a bigger market cap than Bitcoin, then you know they're talking out of their ass. They don't know what they're talking about. But although this is a bad mistake, there's another more common one that's way worse. It can be easy to spot when other people are lying to you sometimes. But how often do you spot when you're lying to yourself? And which one is worse? Someone lying to you or you lying to yourself? You. Especially if you start to believe your own lies. In crypto, lying to yourself will hurt you in one specific way. It's hard to make money in crypto. It takes time, patience, persistence. It's easy to trick yourself into thinking you're putting in the work when you're really not. Browsing X is not putting in the work to find the best cryptos. And even worse, if you lie to yourself, you're gonna make excuses for your mistakes. So you're never gonna learn or improve. In crypto, if you're not learning all the time, you're dead because someone else is. You have to be learning and innovating all the time. You have to be in the market, making investments that go right and learning from the ones that go bad. But there's one mistake that wipes all of that out. Mistake number 12, you can't afford your losses. If you don't manage your budget so that you can afford short-term losses, you won't be able to sustain your investing journey long enough to build real wealth, the goal. Now, this sounds obvious, but you'd be amazed how many people forget about budget, all because they want to risk too much and get rich quick. Your number one goal as a beginner should not be getting rich quick. It should be to gain experience and consistency. But with unaffordable losses, you'll never achieve this. Experience and consistency will make you money, but you have to earn experience and maintain consistency. Again, this one comes down to the right mindset. Mistake number 13, you have a get rich quick mindset. Instead of aiming for experience and consistency, you're just aiming for riches tomorrow. But there's always a mistake that will lose you everything. Crypto is like Gotham City. It's filled with criminals, thieves, and scum of the earth, except in crypto, there's no Batman to save you. You have to save yourself. Like, sure, the majority of crypto users are nice. They're good, decent people just trying to make a buck like everyone else. But there are plenty of bad agents out there, and they will take everything you have as soon as they have an opportunity. And unlike banks who insure your money when they're deposited in crypto in your wallet, when it's gone, it's gone. That's it. This is mistake number 14. You have terrible security. To keep your money safe, make sure you're using a reputable wallet and a reputable exchange. I always link good exchange options in my video descriptions. If you're ever looking for a new one, make sure you also have two-factor authentication enabled always. And for the love of God, make sure that you're sending money to the correct address. Don't write addresses manually. Try to use reliable methods like QR codes. And that brings me to the next mistake. This is a big one. This one has wiped out more beginners than maybe any other on the list. This happens all the time. Beginners pick a token that they like, they invest money, and suddenly the price starts going up. This is excitement mode. In a few hours, they've 3x their money. A few hours later, 5x their money. Later that night, it's a 10x. They're thousands of dollars richer, having done zero work. They're living the dream, and that's when they make mistake number 15. They don't have a profit target. They check back at 2 a.m. and their crypto has tanked. They've lost their 10x gains. It's all gone. Because they had no profit target, they never knew when to call it a win. If you don't have a plan, greed will tell you to just keep going. Fingers crossed it's gonna go from 10x to 20x. Always set a profit target on when you want to get out. You have to know what you're after when you make an investment. Maybe it's a 2x, maybe it's a 3x, maybe it's 20% gains. Whatever it is, when you hit that level, you need to know to take your profits and run, because at the end of the day, the only way to make profits is to take those profits. So instead of greed and mistakes, why don't you just avoid leverage so you don't have huge losses? Limit yourself to verifiable information so you get reliable advice. Know a lot about one niche. Focus on learning instead of blindly copying traders. Never go too big too soon. Set realistic expectations and embrace losses as valuable learning opportunities. Focus on spending time in the market. Don't buy and sell too much. Do not get emotionally attached to your investments. Do not mistake price for value. Be honest with yourself about your shortcomings so you can actually learn long term. Make sure your losses are affordable and make a budget. Avoid the get rich quick mindset. Have rock solid security and have a price target. If you can avoid these mistakes, I bet you'll see your crypto profits double in the next year. But of course, that's going to be a little bit tough if you don't know the basics of crypto. This video on screen is built to take the absolute beginner all the way to their first $10,000 in crypto profits. I'll see you over there.